Hello traders, Gary Wagner here just after noon in Honolulu, 5 o'clock in New York. It is Wednesday, November 15th, 2017, and this is the Daily Report for Gold and Silver. Lower pricing across the board in the precious metals markets, with gold trading off about $4.60 today at $12.7830. That's after trading substantially higher. We'll go over that when we pull up our technical studies. Silver down 9 cents on the day, $16.97, and that's all in light of a dollar which was really active in the morning but ended up closing unchanged at 93.72. Of course, U.S. equities have been under modest pressure. The S&P trading off about 14 points, about 0.5% today, 25.64, and the Dow Jones Industrial Average down in triple digits, down 138 points at 23.271. Traders, gold continues to be stuck in this narrowly defined range, currently trading $12.7880, putting it down about $4.10. Today was really based upon dollar strength and then dollar weakness. The easiest way to illustrate that point is to go ahead and blow this particular daily chart up and take a look at today's candle. You can see the extreme high that came in at roughly $12.90. So we did have the market move to the top of the range before falling back down and closing actually below the open, and therefore that net change of about $4.10. And as I said, the easiest way to really look at that is to then look at the dollar. You've got the exact opposite in terms of the dollar itself. When we look at this daily dollar chart, we have our 200-day moving average there, our 50-day moving average here. Obviously, as this market came down, technical support came in at the 50-day moving average, which resides at around 93.28. And you can see this long tail up, the exact opposite of what we saw with gold, in which we had a long tail down. So you can see the reversal in the dollar is part and parcel as to why gold came off of the earlier gains it exhibited this morning. Add to that, when we look at the current state of U.S. equities, we can see that the recent activity, this is a daily Dow Jones chart, the recent activity is definitely showing us a rounded top as this market has moved up, and the inability for the political parties to come together and consider a viable tax cut that will A, work for everyone, and B, be able to be passed as a deficit neutral bill. In other words, if you're going to cut taxes, we can't increase the budget deficit. And that's why we've seen this pressure most recently. I believe over the last 5 trading days, 4 of them have exhibited lower pricing. When we look at the CCI, the Commodity Channel Index, we can see that that has certainly turned negative. And the Williams %R has also hit the top, as it has been, as the market has been extremely overbought, and now come down considerably in the last couple of trading days. And traders, we can also see that within the Standard & Poor's 500. Again, we have this rounded top coming in. The S&P is down about 0.5% today, down 13 points. When we look at the CCI, the Commodity Channel Index, we can see that that's broken into the negative, along with the Williams %R, which was pegged solidly at 0 and now has begun to trade lower and well off of that mark. And traders, lastly, do want to take a quick look at silver, because we do have an absolutely interesting formation. When we consider these recent highs that came into the market here, we can simply draw a line which will represent resistance in the market. And considering this recent set of higher lows, we can certainly draw a lower level support. And most importantly, what it tells us is that we are at or very close to the apex of this particular formation. And so typically what happens is, as a market approaches the apex in a compression triangle, which is certainly what we are getting, this reduction in range and this flat or sideways trading, that when it does break, whether it breaks to the upside or whether it breaks to the downside, there's going to be a tremendous release of energy, and that energy should spike the market solidly one way or the other. For right now, my recommendation is to remain flat for those that were stopped out. I did get quite a few subscribers that sent me emails letting me know they are still long the market. And for those traders, as long as you have your stops under what we believe is effective support, which sits at around 62 to 65, I believe that if we experience that upside breakout, meaning a close above 85, we could have a solid chance to at least move to 1300 on gold. Traders, one of the reasons that I am focusing so intently upon U.S. equities recently is the matter of whether or not the politicians can pass some sort of an equitable tax cut. Because without the tax cut, the optimism which has been partially responsible of fueling this incredible run in the Dow, that premium could quickly erode. If that happens, we would have substantial pressure on the dollar. The dollar would come down hard, and thereby gold would move up substantially. And that's what I'm looking at. For the meantime, we are trapped within that narrow and defined range, and so we'll have to see how the outcome of the proposed tax bill works itself through over the next couple of days and weeks. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review.